All right, guys, we're back. Stock Geek, what's up, man?
Hey, good to be back in studio with you, brother.
Yeah, dude. Nikki's out today, but we're gonna kick it. And man, it's probably been over a month since our last episode, and excuse me, I think it was probably a month before that. So this summer, man, we've just been out having a good time and just absolutely crushing the markets. For anybody that didn't see, Travis just put out a video on his Stock Geek TV YouTube channel yesterday going over his kind of mid-year performance numbers. Trav, you've just been kicking the S&P's ass, man. Congrats.
Thank you. Yeah, thanks. Yeah, so far so good. I don't want to jinx it, but it's a good start so far.
Yeah, what I really liked about that video is how you showed like how it's not just net returns that matter, it's volatility and drawdown adjusted returns with things like the Sharp ratio and stuff like that, which has just been working out really good. And what do you attribute that to? Like, is it a handful of good plays? Is it, just good risk management on things that aren't going in your favor? Like, what do you think has caused this to work out so well this year for you?
Yeah, it's a great question. So I think it's a couple things. The first thing is just making the right stock picks is really first and foremost. I mean, that's always going to be the number one. And so I've been fortunate to have some picks that have done really well this year. A lot of that though comes from also being like unafraid to buy dips, whether that's a stock that's going down, in any given market time frame, or like we had that big correction in April. I obviously did significant buying in that April correction when we had the trade war at peak fear, and we had that big
Mm-hmm.
drawdown in the overall markets. And so buying aggressively during that time frame, has worked out very well. And buying every dip doesn't necessarily work, right? If we get into a grinding deep bear market. But I think, especially for a longer term focused investor like me, if you're not buying in those times when stocks are getting really cheap, then I think you're doing it wrong. So I was okay if there was further downside past April and May. I didn't expect us to have the second fastest correction or second fastest recovery from a major drawdown to a new all-time high in the S&P. We didn't know that at the time that was going to be the case in April, but we had a pretty good idea that there was some pretty good stuff on sale. So yeah, not being afraid to buy that dip. Making good stock pick choices. I focused a lot of my picks around areas that I thought would continue to grow that were hot before the dip and then were going to be hot, later on. And those are things like AI themed stocks like TSMC or AMD or Micron. And then also some stocks like Coinbase that I knew just from a fundamental perspective were continuing to perform well. But managing a portfolio comes down to a ton of decisions. Are you making the best decisions with the best possible information every single day, day in and day out? The risk measures from my portfolio, part of that also benefits from I had a pretty big cash position. I even at the worst of the big drawdown in April, I think I was still sitting on around 30% cash in the portfolio. So that's been a nice buffer to provide me some extra cash and some downside protection even in the downturn. And then I think the last thing I'd say is being quick to cut positions when the thesis has changed. And so I've been trying to really be disciplined about that, and certainly have had some stinkers that didn't go my way in this portfolio, but I've been quick to cut them out when it seems like either my thesis has changed or something's not working as I expected. So that's always
Awesome.
helpful.
Awesome, man. Yeah, I mean, it's just been a interesting seeing how, the markets just went from peak fear, like you said, in the spring and having this just super aggressive bounce. I mean, that's really what, traders and investors are always looking for, right? Is like things on sale. And we've had Bitcoin on sale several times over the past couple of years. And obviously, we're going to talk about that, with Bitcoin at new all time highs. And it actually yesterday just hit my main profit target for this market cycle. So I'll talk about what I'm expecting and doing and all that good stuff. But
Yeah, I'm
yeah,
not the
man,
only one whose portfolio has been popping off. Yours has been crushing it as well.
it's been pretty wild, man. And just, getting the messages from the Wealth Incubator community members, hearing the stories of life-changing gains, that I think for me and probably you too is like what really keeps us going at a certain level. It's like, why do we do this? Right. It's like, yeah, trading and investing is awesome, and we could just do that. But to see everybody else that's also crushing it, I mean, that just gets me so jazzed. So it's been fun watching that as well.
Definitely.
Yeah. So yeah, I mean, we're halfway through the year. All pretty much all markets are up, but I guess what else is happening out there? There was all these recession fears, tariff fears, inflation fears. Maybe just if you could give everybody a high level overview of just what everything looks like right now. Is the tariff stuff still a hot topic? And I saw just this week more headlines and more battles coming. It looks like today inflation might have been ticking up a little bit. What's your read on kind of the macro picture right now?
Yeah, and I'll start by bringing us back to the beginning of the year because it's like easy to forget. Even just 6 months in, it's been such a roller coaster. 6, 7 months in, when we started the year, we had so much optimism. Like the markets were moving in the right direction. It seemed like the global economy, was on pretty stable footing, and we had promises of deregulation and business-friendly, political climate. So things were looking up, right, for financial markets as a whole, certainly in crypto as well, deregulation on the table. And then, of course, we got the nasty surprise with the Trump tariffs and the Trump trade war in March and April. And I think the reason that was so impactful was because it was such a surprise. We were expecting to be in this like new golden age bull market, and this brought about some serious economic risk. And it wasn't just a figment of our imaginations. Like you look at the prediction markets probabilities of recession, they were up at 50 or 60% at the height of the trade war panic. And that's because it had so many downstream effects on businesses. A lot of retail businesses couldn't figure out, are we going to have to completely upend our supply chains again like we did back in COVID? Are we going to be short of product on shelves? Are we going to, have to raise prices again on consumers? Are we going to be back in like this crazy inflationary environment? And that's going to be bad for, for consumer psyches. Maybe we go into another, 2022 like environment, right? And so that's what we were facing in April. It was like a complete 180. And then, of course, we know that the Trump administration backed off, extended some deadlines, had some agreements that they said that they had, tentatively put in place with some countries. And so that pulled us back from a worst case scenario. And it was like this self-inflicted wound. And thankfully, like we started to address it a little bit. Now, as we sit here today, things do look like they're moving back towards the riskier side of the equation with the Trump trade war kicking back into gear. Some of these deadlines are now approaching again. I do think the market will not be quite as surprised this time. And I do think the market sees the Trump administration as jockeying for position and trying to get a good negotiating position. So ultimately, I think the thinking is that we're still going to avoid a worst case scenario with a lot of the major countries that matter, knock on wood, hopefully. But still, there is some potential risk there. And then also we've seen things like inflation figures in the CPI that just came out today, up a little bit from the prior month. So we were in a nice cooling trend of inflation, which was another part of that bull case when we entered the year. We had more rate cuts priced in. And then now we're moving into the summer period. The trade war stuff may be contributing a little bit as well. So we're starting to see a little bit of uptick back in inflation. And that combined with, an obstinate Fed who doesn't want to cut rates anytime soon, kind of takes a leg out of the stool in that bull case as well. But generally, the things that really matter for the economy, like the unemployment rate, jobs data, that still remains on pretty solid footing. Retail sales bounce back, look pretty good. We had retailers and airlines. A couple of those reported earnings last week. We'll get a lot more in the weeks ahead, but we did get a couple last week. And those actually said that, things kind of bounced back from the trade war freak out. So yeah, I would say to sum it all up, it's been a roller coaster. We're still trying to figure out what the baseline is going to look like by the end of the year, especially when it comes to things like the tariff side of the equation. But overall, we still look like we're on pretty solid footing. We've certainly been in a hot financial markets. I could see things cooling down for a bit, perhaps, but that's not necessarily a bad thing. So that's kind of where I see things today.
Yeah, thanks for that. It seems like, whenever I look at price action, it's just like the market has been really quick to shake off quote unquote bad news or anything that looks like an immediate risk. And it has been real quick to react positively to positive news or encouraging news. And so We've seen that both in stocks and in crypto. And this week is supposedly crypto week in the in the US government. I know just as of like an hour or two ago, they kicked back the latest version of the crypto bills, and I'll have to do some more reading to see what actually comes of this. And I know they're going to retry, I think, later this afternoon. So by the time this episode comes out, maybe we'll have more clarity on it. But apparently, some people want stronger anti-CBDC language in there. And there's probably some other reasons that people voted against it too. But I think that is a really important piece of it. But yeah, I don't know. So markets are up. Price action is shaking off any bad news. What else are you seeing out there? Or I guess what's your just kind of general read on the situation, or any other big topics that would be worth talking about?
Yeah, so I mentioned earnings season. So we've got on the stock side, earnings season is kicking off. We have the big banks reporting this week. We'll also get Netflix and TSMC, so a couple of early tech reporters, and then next week we'll really get into the bulk of the S&P 500 reporting Q2 earnings. So it'll be interesting to see what are they saying about the back half of the year? What does guidance look like? Is that going to continue to support a further market rally? And I don't see anything yet that gives me any concern out of the earnings season. So knock on wood, we'll see how it plays out. But I think so far it's been a decent start. The other thing that I'm noticing outside of the fundamental side is like themes are hot. We're seeing themes like space stocks. I mean, Rocket Lab was up another 4 or 5% at one point today, hitting a new all-time high. AI stocks like Nvidia, AMD up again today. Battery stocks like QuantumScape have been raging. Quantum computing stocks have been doing well still. Fintech, Robinhood, SoFi, a lot of those, hot fintech stocks. Coinbase, which got added to the S&P 500. Boom. That was part of the thesis on that trade earlier in the year as well.
Hell yeah, man. You nailed this one.
Thanks, brother. So it's been really a risk-on environment, and I'm curious to see if we continue that through the fall. Sometimes we do tend to get into a more volatile period when we get into August and September and October in the stock market. So will the fall bring us, late summer, early fall, bring us, potentially a pullback in volatility, or will we continue to just rip? And I honestly don't know, but it's gonna be fun to watch. But I am trying to think about, as more people get carried away with risk taking, I am thinking about scaling out strategies, at least taking profit on stuff, maybe how to protect gains in a raging bull market without going full bear,
Yeah, I think that's a good topic that we can talk about, is like, what are we doing now? I know a lot of people have been asking me like, hey, are you selling Bitcoin? Are you still buying? And, I'm starting to think a little more defensively, because we are both in Bitcoin and stocks over 2 years into a bull market now, right? So the bull market in Bitcoin started January 23. So we're like, over 2.5 years into this run. And it's funny, man, I'm seeing this narrative that, and I'm going to actually do a show on my channel with some well-known Bitcoin maxis that think that we are never going to see another bear market in Bitcoin again, and that Saylor's going to drive us to $20 million a coin or whatever. And I guess my short response to that is I don't think that's true at all. Markets, especially Bitcoin, it is so reflexive, meaning like the bull markets go so high and the bear markets go so deep. Could that fundamentally change? Sure. But I'm going to assume that market cycles are going to continue as they have been, and that this time is not different until I get proven otherwise. So I am going to stick to the same trading plan that I've had in Bitcoin and generally crypto for the past, 12 years, 13 years now. And that is, when we are multiple years into a bull market, what I start to do is I start to trade with the goal of not accumulating more Bitcoin at these prices, but I start to trade to accumulate more fiat. So like an example of that is this week, I actually took a levered trade on Bitcoin. It was a breakout trade here at 110. So I'll go down for you guys listening on the audio podcast. I'll just talk you through what's happening here. But I sent an alert. What day was this? I guess this was last Wednesday, July 9th. And I was like, look, I think we're squeezing into this 110. If we break this 110 level, this is not only the all-time high, but, multi-month resistance. And so I was watching intraday here on Thursday as we popped, overnight on Wednesday, and we consolidated. And then after market open on Thursday, I noticed that bulls were running it up through that 111. And so I bought a futures position. So instead of just buying spot Bitcoin, I bought a levered position to get some extra juice. And that's where things just ripped and very quickly went from like 110 up to like 118 or 119. And then overnight, over the weekend and going into Monday, we got that kind of euphoria push from 118 to 123. Excuse me, man. I'm out here in Colorado right now, and there's all these fires. There's like 2 fires at the Grand Canyon, and then there's a big one in New Mexico, and then another big one in Colorado. And so I've just been like coughing nonstop from all the haze in the air. So sorry guys, I'll try to mute myself whenever I'm hacking up a lung here, but but anyway, yeah. So as the markets open Monday, I took some profit around that 120 K zone. So again, the goal, and what I'm not doing is I'm not buying like spot Bitcoin up here. I'm buying like levered positions and then closing at predetermined profit targets to where I'm getting juice on my money, and then I'm accumulating more fiat, right? So that the opposite of that is like when we're in the depths of a bear market. I've got a lot of drawings on these charts, but when we are more than 50% below all-time highs, that's where I like to aggressively accumulate Bitcoin. And we've talked about the strategies that I've built for TradingView, where our members can go back and back test different DCA, dollar cost average strategies, and see how your returns are actually better when you aggressively buy in bear markets versus doing what Sailor's doing, which is just buy at any price. Which, look, there's nothing wrong with that. If you're a Sailor and you've got tens of billions of dollars that you're raising, and you are basically the biggest advocate for Bitcoin, and you're driving a lot of capital, especially on the institutional side, like, I get the narrative, like, buy at any price, it doesn't matter. But for individual traders like you and me, and probably a lot of people that are out there listening, if you don't have tens of billions of dollars of institutional capital, you might want to think a little bit more about risk to reward and you don't have to time the market perfectly, but if all you do is put the odds in your favor by aggressively buying in bear markets and then taking some profit in bull markets to where you have more fiat that you can buy when bear markets happen, right? Now, obviously, and we've talked about this before, the whole God candle idea and going to $1 million a coin, there is a possibility, even though it's not, I think, a super high probability, there is a chance that Bitcoin does just go straight to $1 million and there is no bear market. I just don't think that's likely. I think that humans are humans and emotions are what drives price. And so I do think at some point within the next year, we are going to have a market top and we are going to see some sort of bear market. Does it go as deep as prior bear markets? Maybe not. We'll see. But again, every market cycle, there's some narrative why this time is different and why Bitcoin is up only, right? I hate that term because it just causes people to do stupid shit. So that's my thesis, man. What do you think?
Yeah, no, I think it makes a ton of sense. I think you can't ignore risk forever, and I think it makes sense to think about risk and reward, and you framed it very well. And MicroStrategy or strategy, they're using public shareholder capital. It's not their own private capital, right? Sailor has a stake, but it's not all his own capital he's buying with. He has a different view on risk reward than we do as, managing our own capital as investors. So
yeah,
I'll say that. It's interesting though, there's been a lot of action in crypto on the stock side. I'm curious to get your thoughts on what we're seeing in crypto treasury companies. Obviously there's a ton more companies now that are trying to accumulate Bitcoin as their primary asset. And then there's also now several Ethereum and even Solana treasury companies. And it seems like every day we get an announcement of a new one. So curious to get your thoughts on that trend.
Yeah. Let me put that reminds me to we need to talk about the exchange balance situation where the amount of Bitcoin on exchanges is rapidly deteriorating. And so there could be, and this I think is one of the cases for that extreme bull case, or uh, backing info for the extreme bull case, right? And that is being driven by a lot of these treasury companies, right? Is like just the supply crunch. So if you look at this like head and shoulders, this isn't price. This is the percent of Bitcoin, the balance on exchanges, and you can see that level is back to like 2018 levels, and it's actually falling quite quickly. So that is a big risk to a melt up situation. And that is being driven by companies like MicroStrategy and 21 and all the others that are now competing. Oh, and by the way, Nikki actually bought MicroStrategy again this week. I was going to do it, but she did it before I could. So, you know, even though like these things are higher risk, I look at them as like just tradable tickers. And we had a really good trade last year on the $200 breakout, and basically had pre-planned for that $500 price target, which was at the time the high. And then it's just been choppy since then. But with the new all-time high, you can see a lot of these treasury companies are starting to perk up again and get breakouts and stuff like that. So the thing that I'm not sure about, and this is why I don't have like a massive percentage of these tickers in my portfolio, and why I know Nikki is also kind of risk adverse, is like, what is the premium that can be realistic for these things? And, Trav, you've done some excellent breakdowns on this, but have you had any changes of heart or updated your opinions, or is it still the same? And if so, can you like, I guess, recap what those are?
Yeah, I mean, I don't think my view of it has really changed that much. I see people sometimes arguing that like these, that they should apply an earnings multiple to, like the Bitcoin yield or whatever, like temporary figures they're using for, Bitcoin acquisition. And I think that's just kind of crazy because it essentially assumes that you're never going to get a cycle that is not a raging bull market, right? Like you gotta price these things through a full cycle. I think generally, I think I would expect to see the multiples to NAV compress with more supply. So with more supply of other Bitcoin treasury vehicles, I would expect that the multiple of NAVs generally would compress. Now, I don't expect them to compress when we are in a fast bull market where underlying Bitcoin price is going up at a rapid rate. So like, I'm not expecting NAV multiples to come down in this type of environment at all. But again, I think if you're looking over a longer cycle, if you're trading these on a daily basis, that's a different ballgame. But if you're thinking about holding these on a multi-month or multi-quarter, multi-year basis, you got to think about the full cycle. And that's, again, where I think that we're going to see a couple things. One, you're naturally going to see a reversion to the mean when we get a bear market again. When we get some type of price action that's not bullish, we're going to have NAV multiples compress because of that. Like you saw that with MicroStrategy, back in the 2022 and 2023 markets. So I would expect that no matter what. And then the second thing that's still debatable is, will NAV multiples compress because of all the extra supply, all the additional treasury companies? Now, I've heard some interesting back and forth arguments on some different conferences and podcast circuits in the last couple of weeks, and I don't know that I fully bought them, but some people would say, okay, look, even though there's more Bitcoin treasury companies, essentially what can happen is if some of them go trade below NAV in a bad market, they'll either be able to buy their own stock or some other company will come and acquire them. And then you'll have MicroStrategy rolling up these companies and things like that. And so I think that is a natural way to manage the cycle for them. Yes. But I also think there will probably be some that are fueled with too much debt that will be for sellers. And in the interim, that's going to create price pressure. And even if MicroStrategy rolls most of them up in in the next 5 or 10 years through various cycles, I would still expect that you're going to have pressure on the NAV multiples again in those tougher markets. And so it's not a risk-free what do they call it, infinite money glitch. We've always said there's an arbitrage when you are trading at these higher NAV multiples. You issue stock, you issue debt, whatever, to buy the underlying asset. But eventually those converge. Like your NAV multiple compresses as you sell equity, and your holdings value, your book value increases, and those will converge. And so you got to play the game while you have it. So it's not surprising to me that we're seeing these treasury companies continue to come to market, continue to sell more equity and preferred stock and debt. They're actually doing the rational things. But as an investor, from an investor lens, you got to think about, look, there is risk here. There is risk for the underlying asset to fluctuate in price, and there is risk for the NAV multiples through the cycle. So that's how I think about it.
Man, awesome stuff. Yeah. I look at them from my like risk level. I look at them as tradable tickers, and I'd rather hold the actual spot Bitcoin than, a MicroStrategy or something like that. It's like you can get alpha on the way up, but yeah, like you said, when that compression hits, or if there is a bear market or some kind of black swan, those can crash much harder and deeper. Just like we saw with MicroStrategy, just in the beginning of the year, right? Like this thing from that pivot high, I mean, it was down over 50%, right? So you got to be careful. And there's so many ways now to express an opinion in Bitcoin's price, right? We've got perps, we've got regulated futures, we've got ETFs, we've got spot, you've got centralized exchanges, decentralized exchange, all these stocks now. So there's so many ways to express an opinion. And I think it's, for me, the only way that I want to express it in MicroStrategy is just trading momentum. And then like when I feel like there's a blow off top or something, I'm going to get out and then take that cash and use it to increase position sizes or diversify into something else.
And I think that's the right way to play it. I mean, we've talked about with our community members how there's parallels here with like, traditional mining, like gold mining, precious metal mining businesses, where like you run the risk by using all these other derivatives of the underlying asset. You run the risk of underperforming the underlying asset itself. And so if you believe in the underlying asset, why don't you own that, especially over like a long cycle? Gold miners famously will underperform the metal for long periods of time. But in raging bull markets for the underlying asset, you often will get a little bit of extra leverage from owning some of these derivative vehicles. But I think they're much more suited for trading and getting in and out quickly than long-term holds, in my opinion.
Yeah, awesome. Yeah. All right, cool. Let's talk about where we think markets are headed. So my main profit target for this market cycle was 120. And that actually started before we even broke out of the 70K high. And I'll just show you guys who are not in the community for whatever reason. If you're not, go to wetalkmoney.com/community and get in our Discord and our live classes. But this is just kind of a recap of like where I came up with 120. The initial idea was looking at what we call a 1-to-1 measured move of the prior trading range. So last market cycle, the pivot high was 69 or 70K. The pivot low was, call it 15K, right? So we had this really large established trading range. And basically, if you measure that range and then you stack it on top, very simply, that comes to about 120. And then there's also a few other tools that I use, like Fibonacci extensions. And I just noticed there was a lot of confluence around 120. So now that we've hit that, the question is, okay, now that we've had a reasonable measured move is a 1-to-1 of the prior range. Is that all we get? Or is this just starting where, like, using like 2016, we did something similar, 2016 into 2017. And then when we were up around like 5,000, I was like, oh my God, we just came from, basically 200 as the market cycle low. And here we are at 5,000. I was like, I think we might be close to a top. And then it was like, just in the course of several weeks, we went from 5,000 to almost 20,000. So that's why I say, like, Bitcoin can outperform just what seems like rational technical analysis, or just like reasonable technical analysis. And so I'm thinking, like, on the mental model side, where I get off of the charts and I'm like, well, what's happening? How much capital's coming in? And that's kind of, I guess, the fun and the challenge of this game of trading and investing, is like, okay, well, there's all these mental models. There's stock to flow. There's looking at market cap. Like, which one is actually going to play out? That is literally the 20 or 30 trillion dollar question. And so off of the chart, what I started just kind of looking at, and again, I'm going to temper expectations and say that this is going to sound like we're smoking some hopium, but this is just trying to come up with some future profit targets if 120 breaks. Okay. So I tweeted this, was it yesterday? Yeah, yesterday. Basically, I was looking at the market cap of the top assets in the world, most of them being stocks, right? We've got 4 stocks that are more valuable than the Bitcoin network, and then you've got gold. So basically, we're on par with Amazon right now at about 157K. We're at Apple's market cap. At 187K, we're at Microsoft. Around 200K, we would exceed Nvidia, which is currently the most valuable publicly traded company in the world, at 4 trillion market cap, right? And then if we do like a 10x from here, which puts us at about 1.1 million, that's where we would equal gold. So my bull case is that we do this. We're in a speed run, and this started, when Bitcoin was actually down around 11 or 12, and then when we flipped silver, I think people really started to take that seriously. But we're now more valuable than Google, and I think that it is inevitable that this happens. The only thing I don't know is, does it happen by the end of this year or this halving cycle, or does this become a crowded trade? And does something happen where, liquidations happen and we go into a premature bear market, right? And then I just wrote up on the chart, like, basically, to be more valuable than Nvidia, that's only about at least from yesterday's price at 120, about a 68% move. So we've had a little bit of a pullback today off of that. And yeah, so that's what I'm really thinking through, is I'm looking at, all the other mental models, stock to flow, etc. And I'm just thinking through this. So I can't predict it, but what I can tell you is what I'm doing with my money. And then, obviously we're not financial advisors, at least Trav and I aren't. Nikki is, but she's probably not your financial advisor. And so you want to talk to your own financial advisor and maybe try to figure out what percentage of your net worth is a good number for you to have in Bitcoin, and then map out the bull case and the bear case to figure out how you can manage your position sizes so you have no regrets no matter what happens. That's how I think about this, right? So I'm starting to take some profit up here just because, again, this was my profit target from 2.5 years ago, basically. And when we hit this level, I don't just get hopium and dissuaded into thinking that Bitcoin's going to go up forever and then fall prey to the moon boy narratives. I think that market cycles are going to continue to play out. And so, yeah, I'm taking some profit up here, and I'm also still taking bull market setups. I will continue to buy breakouts and dips as long as the bull market is intact, which that could go all the way to 1 million, right? So I could still be net long very heavily for months or years into the future. But if the overall market direction and market structure shifts, then I'll stop and I'll either get short or I'll take bear market setups. So I guess that's kind of my general thesis. TD, does that make sense? What do you think?
Yeah, it makes a ton of sense to me. Yeah.
What's your opinion? We
Wind
going to a
moon.
million? Yeah.
I barring some like significant shock to the world or some unforeseeable event like the Bitcoin network going down or getting hacked or whatever, I don't see why Bitcoin shouldn't overtake gold in the long run. But the long run, it might be 10 or 15 or 20 years, right? So like I think that's my mental model for how I'm thinking about it on kind of a long time frame. And we always talk about a lot of the tailwinds, the kind of mega macro tailwinds, right? Like governments spending more money than they take in as far as the eye can see. Deficits and government debt continuing to grow like throughout our lifetimes and rarely ever taking a step back. That's a mega tailwind that supports Bitcoin and risk assets like stocks on a long run time frame. And that's just one of those things. It's like has not changed, does not look like it will change. And if that does not change, again, I don't see why Bitcoin doesn't continue to become much more valuable over time. But like you said, like there's going to be cycles and times to, get more aggressive in accumulating or get more aggressively short or, sometimes just hodl. Sometimes it's just holding and waiting. In fact, that's a lot of the time where we're just holding and waiting. I'll give a prediction for what I think happens this cycle. I think I actually think it would be a good thing if we get a little bit of a pullback in both stocks and crypto in the near term, and then I think that gives us cover to run further in the end of the year. And so maybe maybe that means 150 to 200K potential here, late this year, early next, something like that. That's just more on a gut feeling than anything else. And looking at, how sometimes if we move too far, too fast, and we get into too much of an extreme greed situation in both stocks and crypto, like we did in stocks in early 2021, that kind of creates the conditions for its own demise. So
Yeah.
that's why I'm saying like it's healthy to get a little bit of a cool off. Otherwise, you just get really silly behavior that then, creates its own demise. So, yeah.
Yeah. Once too many people believe the up only narrative, that's when the bear market starts. So a couple other things. Yeah. Like one thing that a lot of people have noticed a correlation with is M2, global money supply, which there does seem to be evidence for. So as long as that keeps going up, that's kind of to your point, like governments are going to keep printing and maybe there's correlation on the way up unless there's a recession or a depression. What I would like to see, I think ideally, and this is kind of in line with prior market cycles, is like maybe through the end of this year, if Bitcoin can keep the bull market intact and maybe make it up around 200K or exceed NVIDIA's market cap and become more valuable than every stock in the world, I think that would be huge news. And then like, let's say we go into both a stock and Bitcoin bear market after that, maybe into next year. And then so Bitcoin comes down, but also stocks do. So Bitcoin like maintains number two. And then maybe next cycle, maybe we get the 10X to overtake gold. I don't know. It's crazy how gold's got 5,000 plus years of history of being money. And Bitcoin's at like 15 years and already it's just blowing the socks off of it. It's like a blip in the history of time,
Yeah. It does remind me a little bit of like tech product cycles though, like ChatGPT was the fastest to whatever benchmark 50, 100, 500 million users. And there's some great charts out there. I don't have one in front of me showing like previous product cycles. It's like radio, television, and they're like these slow sloping graphs. And then you get like closer to, like things like dial-up internet and it's a little faster. And then you get to mobile phones and it's much faster. And then you get to, ChatGPT and it's like parabolically faster. And so the speeding up of adoption cycles is perhaps at play here as well. I think it is at play.
Yeah, yeah. I mean, with the internet and just how fast info moves now,
Hmm.
yeah, it's pretty wild. Yeah, this is a chart, going back to like the telephone and TV,
There it
and
is. Yeah.
yeah, now you can see, yeah, Bitcoin's right here. We're still early, and I do believe that. I mean, in the global world, and when you compare Bitcoin to other just asset classes, right? We're comparing Bitcoin so far today to individual assets, but when you compare it to, the total amount of equities or the total amount of real estate or whatever, like it is still very, very small. So yeah, I think it's got a lot of upside. It's just I just don't buy the narrative that like bear markets are over. Like I think that is very dangerous thinking. And that's what causes people to buy the high and then freak out and sell the low. All right, cool. Well, we've been going for quite a while. Let's see what else is happening. Yeah, we talked about inflation. Yeah, I'm just trying in kind of real time to scan and see what's happening with the crypto bills. I think that stuff's going to work itself out. I don't see any major major news coming today for that, but yeah, what else is moving, or what other opportunities do you see out there?
Man, it's like I mentioned, I'm kind of trying to figure out just in the last couple of days, I've been thinking more about how do you protect some gains in case we do get a big correction. What's overextended that you might be able to actually profit off of. I'm still kind of a little bit early in that process. I think I'm thinking about maybe putting a video together on the channel with some of that content here soon. So
Nice.
perhaps that'll be the next one to come out. But yeah, honestly, I'm just kind of thinking about how do I make sure we don't give a big chunk of the recent performance back, and you know yeah, we'll see if there's
How
something
much
there.
cash do you have in the public portfolio?
It's high. Let me see if I can pull it up right here.
Are you like close to 30, 50%, something like that?
I'll tell you the exact figure. I am 49% cash at the moment, so it's a very heavy cash position.
Nice. And
Um,
you've been kind of close to that for the year, right? Like you haven't really exceeded 50%.
Yeah. I think I started the year a little higher because I was still getting that portfolio invested. I'd funded it back in
Mm-hmm.
October because it was a fresh portfolio for the YouTube channel. So this is honestly a much higher cash position than I'm usually comfortable with in a market like this. Even though we might be a little bit overheated in the short run, like we're clearly in a bull market and things are popping off still. So it's like, why am I sitting on 49% cash? Like, I don't expect like GFC to hit tomorrow. So it feels
Yeah.
high. It feels high. I mean, it's also a nice buffer, but it's certainly high. So, I'm going to be looking for plenty of new ideas over the next couple of months. But I also want to, if we do get a big correction, I also kind of want to short some trash stuff that I think like needs a good, healthy 30-40% correction.
Oh, that'll be fun. So you're
Yeah.
you're up what, 30 something percent on the year in that account?
Right around 30%. Yeah.
Cool.
Right
And
around
the
30%.
S&P's up what?
Seven-ish so
Nice,
far
man.
year to date. Yeah, something like
So
that.
so to be up that much with still 50% cash, like that's awesome.
Yeah, exactly. Yeah, and that's
I
why,
I oh, go ahead.
I was just gonna say, and that's how, that's why the risk adjusted metrics are even better. I'm basically, I think, beating the S&P. I'm like 5x the S&P's risk adjusted returns right now, because the cash position is still so high, and on a, you know, you could look at other things too, like how many months of drawdown versus the S&P, or how many months positive versus negative. And so I'm beating the S&P on all those metrics right now, but it's, we got a long way to go. Like this is the first year of the portfolio. So I'm hoping to be able to do that over like 5-10 years. We'll see.
Hell yeah. Well, I can tell you,
Yeah.
I am not anywhere close to 50% cash right now. Because we're, so far into this Bitcoin bull market. I want to start increasing that. And I need to do an updated percentage for the community. Usually what I do is give everybody like how much is in what percentage is like crypto, what percentage is stocks, what percentage is real estate, startups, all that stuff. And then like on the capital buckets below that, like cold storage versus trading. And right now I'm trying to raise more fiat by trading futures and stuff up here, because I've been riding this trend and adding to this trend for like 2.5 years. So it's like, it feels good. And I'm looking at the numbers and I'm like, hell yeah, man. Like the position sizes keep getting bigger and all that. But yeah, the longer we go in the bull market, the more nervous I start to get and the more fiat I want to have for the bear market or for like washout opportunities and things like that. So I might have to start washing cars on the side of the road to start raising some fiat.
Oh man, are you
Oh,
looking at all at Ethereum, which looks like a pretty strong chart right now? Or I say strong, I mean really if you're only looking on a couple of months, it's on a longer term basis, it doesn't look as strong. But
dude, Ethereum is
lately it's been perking up.
yeah, Ethereum is the thorn in my side this market cycle. Like I've made a lot of money on Ethereum over the past decade, and this market cycle has just been look at this price action. Like, so we had a good breakout trade here in what was this November, December 2023. And it worked like a charm, went from 2 to 4K. So it was basically a double. Did I take profit here? No. I was like, oh, we're definitely going to go for a new all-time high. And then look what it did. It chopped around and then dumped all the way back to my entry. I didn't take anything off the table. I held through this pullback. So was basically up like, call it 80, 90, 100%, gave it all back. And then it went all the way back to 4,000. Did I take profit there? Nope. So, this is so uncharacteristic of me, like to not at least scale out like a quarter or a third, or usually on a trade like this, I would be out at least half. And then what I did is I waited, and then closed basically like at right here was this like January, like around 3K. So I made money on it, but it wasn't nearly as what it should have been. So I'm telling everybody this for context of like my frustrations with this price action. And then it dipped below that 2K, came all the way down to like 1,400, came back up. It actually gave like a technical breakout trade here. I didn't take it, but I know a lot of guys did. And then it came down and grabbed stops. And it's just a whipsaw of like pain in the ass price action. So
Mm-hmm.
here's one thing that I know for sure. Bitcoin made a new all-time high. ETH didn't, or at least it hasn't yet, right? Even from the last market cycle, like it's starting to underperform. And if we look at the ETH BTC chart, you can see, I mean, this thing's been in a bear trend since 2022. So it's been underperforming Bitcoin for years now. Will that trend reverse? It could. I just think with what we've seen with, the Ethereum Foundation kind of milking it, and I don't know, man. I just don't, it's not a high conviction play for me. Will I take another trade? Sure. I mean, if I get something clean that I like, I'll take another stab at Ethereum. But again, I have some in cold storage, but it's not a huge percentage of my portfolio. I am like over 90% Bitcoin in my crypto portfolio right now. And that's been because of my thesis was I thought that this market cycle was mostly going to be a Bitcoin market cycle. And I've been rewarded for that, right? Like Bitcoin dominance has been going basically straight up ever since the bull market started. And so I've been very conservative on alts. I've taken some trades. We made some money on Solana on the way up, but even Solana's kind of a chop fest right now. So
Mm-hmm.
what I am paying attention to is just in general, looking at like the indices or at least the trackers for alts. So if you look at total 3, where you exclude Bitcoin and ETH, we did make a higher pivot high and we are above the 200 period moving average. So we could be going into a bull market for altcoins. We had one bull market back here in late 2024, and that was it. Alts have been really, really lackluster. Now, granted, there are a handful that have been outperforming, like Hyperliquid, and literally, I mean, the list is very, very short. Out of thousands of tickers, there's maybe a dozen that have like real alpha above Bitcoin. And so I know some people have been trading, Hyper and a handful of others that have been outperforming, but a lot of the old school ones, even Doge, huge underperformer. Like, what a big letdown in 2025, right? So I'm waiting, I'm watching, and here's, I guess, a prediction or something that I think could happen is, and we've already started to see this, like with the Bitcoin breakout and the pullback. Some people today on this Bitcoin pullback, yeah, they're selling for dollars, but also some people are selling into alts. So the higher Bitcoin goes, the more likely it is that Bitcoin dominance comes down and we see people start to chase alpha in alts. So I'm more interested in alts now than I have been really all year, but I just don't know if we're going to get a full like alt season. I think the scams were so bad this time, with Hawk coin and Trump coin and all this stuff. It's like people, when they get burned, it takes them time to save up money to lose again. So I don't know. Is it too soon, or will we get another altcoin season? I am historically really bad at I historically underestimate how much capital flows in and how people just want to gamble. So maybe we will get something in the second half of this year. And if we do, I'll be there for it. But I'm just not really going heavy and hard yet.
Well said.
What about
Man.
you? What percentage of your net worth is in shit coins and meme coins right now? 50, in between 50 and 70, something like that.
Man, it's pretty tiny. I was poking around the meme coin space last year. It was fun, but I realized it was a lot of time suck, and like you have to be essentially day trading those things.
Yeah.
I mean, they move on such fast time scales. The meme coins, most of those meme coins that if you're not there literally in front of your computer, like they're almost impossible to trade for profit in my view. I'm sure some people have some good quant strategies or whatever, but for someone like me, it was like, man, it was just a big time suck, and I wasn't sure like it was worth it, to be honest. But I think there probably will be some, if the cycle's not over, I think there's probably still going to be some crazy things that happen in the meme coin space, but I haven't been as dialed into it or in the trenches as I was before.
Yeah, over the next couple of weeks, I'm going to be more dialed into it than I have been all year, just because of where Bitcoin is. And if Bitcoin gets another leg up, then it's like, okay, people are really going to start hunting for shit coins and for alpha, and all the Moon Boy YouTubers will be back and all that stuff. So yeah, we'll keep an eye on it, man. I don't think this is the top, but 120 is a major area. And yeah, we'll just have to be dialed in over the next couple of days and weeks, and just see how price reacts to this zone, I think. Yeah.
We'll see.
So what else, TD? Anything else that I didn't bring up or that you wanted to cover?
I think we hit the good stuff.
Yeah. Cool, man. Well, yeah, again, congrats on your performance so far. Now that you're kicking ass, you got to keep going, man. You can't have any drawdowns. I need you at 60% by the end of the year, man.
Hey, it's achievable. My long-term goal is 15 to 20% compounded annually, but there are going to be some fat years, and if I can push the gas this year, we could get to 40 or 50, maybe or more on the percentage gains. We'll see.
Yeah, brother. Awesome, man. Well, guys, thanks for watching. Make sure to subscribe to the YouTube channel and the audio podcast, and go to wetalkmoney.com. Leave a question for the show. Next time we'll actually do some Q&A. This time we just had so much to chat about, and wanted to get you guys caught up on the markets and what we're thinking. And yeah, if you like it up, share it with somebody who needs to stop gambling and being a degenerate donkey, and come into the community if you want to invest at a high level. All right, TD, thanks for joining me, brother. And
yeah, good times.
Yeah, man. We'll see you guys next time.
Cheers.